Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Thursday, the 17th of November, and what a day it's turning out to be. Before we get into anything, just ask yourself this quick question. Find out if personal one-on-one MarketClub coaching is right for you. Now more than ever, you really need to have that. If you're really not confident in the markets, you want to have some expertise to help, you can give us a call. It's a free call. It's 877-219-1482. It's a free consultation. And so give us a call, 877-219-1482. I'm going to go right on to the markets because they're very important today with what's going on. But what the Fitch? Let me begin by thanking everyone who watched the show last night at 5 p.m. Jeremy and I had a great time. We covered many of the markets that are moving today. If you did not see the show, you can watch it right here. The market action yesterday overall was not good, with a warning from Fitch about European bank losses. The bank stocks were a disaster and have been for most of the week, and it appears as though they're anticipating still further problems in Europe. Europe, of course, is in the minds of every trader to the point where it's overshadowing all other thoughts on the market. As we said earlier this week, reality is slowly sinking into the markets. One of the big movers today is the gold market. This precious metal came under pressure from the get-go and may have further to go on the downside. We still believe that the longer-term trend is positive for gold. However, in the short term, we may see a pullback to the $1,700 level. Readers of this report will know that we are very suspicious about the $1,800 level as a psychological resistance zone. As we said at the beginning of the week, we felt that this was an important week for the market, and it's turning out to be just that. The big day for us is going to be Friday. How this market closes at the end of the week will give us a blueprint for next week. With continued rioting in Greece and the threat of social unrest in France and Italy, these markets are teetering on shaky foundations. Now let's go to the charts and the video and see how we can create and maintain your wealth in 2011. Looking at the charts, we're going to go right there because there's some very important breaking news here. Look at the S&P. We're down in the S&P dramatically. This market is down for the year, as a matter of fact, and we are down, let's see here. The Dow is down about 1.2%, well, 1.5% on the Nasdaq, and about almost 2% on the S&P 500. All of our triangles just turned today. You can see the red triangle here, 11:17. That's today. We're doing this live at 12:15:42 is the signal. It's 12:16 right now. You can, as I said, this is a signal to be short this market because all of our trade triangles are negative. We can see this market pulling back quite easily if things continue in Europe the way they are. We can see it pulling back to the Fibonacci level of around this level, 1160, 1157. It's a 61.8% pullback. And as I say, I think this is going to happen. I think the rest of the month is going to be a little bit on the negative side for the S&P 500. A lot of people have been buying stocks right in this level right here. They all have losses right now. It's a question of, are they going to hold on, or are they going to capitulate and give up these stocks? Also, you have liquidation in the gold market, which we'll talk about in just a moment, but this is a very negative sign for the S&P 500. Let's go back to our next market, and looking at the Dow. The Dow's maybe a little bit different in terms of the overall formation. We still have not had a signal there, but certainly we've had it in the S&P 500, which is down, as I said, 1.86% for the year. And let's go back to our next market, and that's going to be the Nasdaq, and see how that's minus 100. So I already know that kicked in today as a negative zone. There it is, weekly. Right here you can see. Close that off. So you can see right at 2597. The market's 2587 right now. Definitely a top here. We've talked about this rounding out. We talked about that last night on the TV show. We've talked about it most of the week, looking for this market to turn around. We gave you the negatives in terms of we were below the parabolic, and also we were tipping down in the MACD, which we have been doing. So they were the negatives in this market, and as I say, it's not a good close if we close down here. So all of our trade triangles on both the S&P 500 and also on the Nasdaq are negative, meaning the trend is in a major way on the downside. So let's go to our next market, and that's going to be the silver market. And the silver market, as I said, we've never believed in silver going higher, and of course today it was a huge move, or everything minus 100, strong downtrend. Silver certainly, I think, could go back and test this level around 28 to even 26. And longer term, we could see it going to 20, potentially. But right now, the line of least resistance for silver is on the downside. Lots going on today. Just you don't usually see days like this, so when you see them, you have to take advantage of them. So let's go back to our next market. That's going to be gold. And the gold market's under a lot of pressure. It was under pressure from the get-go. However, it's still positive. Look at the triangles. So this may be a buying opportunity. Maybe not today, but maybe later on. And I think that, generally speaking, I think gold is going to make, if the cycles continue the way they are, gold should make its high sometime in June of next year. So let's see how that plays out. But generally speaking, we had our, if you look at our daily trade triangles, came in here at 1754. The market's 1713 right now. This is live, real-time prices. So that was the first indication there was weakness. The next indication came when we went below the parabolic, which we talked about last night and yesterday at 1 p.m. And look at today's action. So how far can this market go? Well, if we put our Fibonacci tools in, we can give you an indication of where we think it can go. And this is what we're looking at. So we're looking at maybe the sixth, we could possibly go to the 1700 level, which is 38%. But if we get a full retracement, 61.8%, we could get as low as 1635, which I think would be a big surprise to a lot of people who are bullish on the gold market. But right now, it would appear as though we're weaker in the silver market, and this market's going to be on the defensive. I think we probably rolled over. Let's see. Yep, we rolled over in the MACD, so that's another negative towards this market. So let's go to our next market, and that's going to be the market we've talked about before, and that is going to be copper, December copper. We said that December copper is going to track the economic conditions, and if the economic conditions, meaning the S&P 500, Nasdaq, Dow, all heading lower, it's not a good sign for copper. So right now, I think we've got our mixed bag. Certainly, if we take out the 330 level, that will be 100% negative on copper, indicating the test of the lows right here around the 310 area. So amazing stuff going on. So really pay attention to the markets and to our updates, because we've been spot on in these markets. So let's go to our next market. And that's crude oil. It's this crude oil has taken a huge hit today. It's down. However, all of our trade triangles are positive. But the key level to look at is this level right here, and that's the PSAR, 97.50. It's about $2 lower than we are right now. It's too early to say this is a top in the crude oil market. Last night we had a very good discussion about the USO and the 61.8% retracement. We got a little bit over that in the crude oil market, but generally speaking, it would look as though we may see this market come back a little bit further than we are right now. So let's go back to our next market. That's the dollar index. As you know, we've been positive on this market, and it's up today. 78.25, 78.50 is a resistance area. However, we put a plus 100 on the trade triangles, indicating the other thing I like about this is, if I can get my telestrator on here and show you, just turn that off and show you what I think this is. We've talked about this on previous broadcasts, but that'll give you an idea. You've got a really, what we call an energy base here. This whole area right here is an energy base. So you just simply draw a line across here, and we can take this, if you take from the lows here, around about 25 up to, let's say, around 78. Let's only 3, but certainly we could go up to test these highs right here around the 79 to 80 level as a test. Definitely the market, people want dollars, they don't want euros at this point in time. So I would be very, very leery about buying the euro. I think it's going to go lower, and that's certainly the way our trends are in the market. It's definitely a key thing to look at. But this is a big, big day. Don't overlook this day. Don't think it's going to come back tomorrow or next day. It's Friday. People are going to be very concerned tomorrow about taking any position home over the weekend. So let's go to our last market. And the market we're going to be looking at is the Reuters Jeffries Index. Whoops, I want to take that. Let me take this, clear the screen a little bit here. Get that off. And let's go to the Reuters Jeffries Index. And that's under pressure today. We said yesterday the 323 level was a negative. We've got one indication here. That's our daily trade triangle, 317.33. The market's trading at 314. If we close down here, that's going to be a new low close. We had the negative in terms of the parabolic, and also I think the PSAR, which is down here, just turned today. So again, this is not looking that good. And this gets back to, we took a lot of flack on our trade triangles being, missed this move up, blah, blah, blah. Our long-term negative trade triangles on the major markets never have wavered. It said it was a false move, and it's proven to be right so far. So same with this market, and you have to go with the trends. You have to go with what the market's telling you, because really the reality is nobody knows what's going to happen in these markets. No one's lived through this before, but you have to see the market action and go with that. So, hey, this is Adam Hewison. One last thing I want to share with you is we had a very good show last night. As I said, one of the calls we had in was about Doug. That's the ultra-short oil and gas. It's actually coming up today. This may be well worth watching in the future, because it may actually see a reversal. If the oil tops out and gas tops out, we could see this market come up. But just a thought. Anyway, I'm going to leave you with that. And as I say, if you have not tried, have not called us yet with our free consultation at 877-219-1482, you should really give us a call. We'd look forward to talking to you and telling you about this program. I think it's going to help you in the long run to make money and protect your capital, which is the important thing as we go into these very uncertain times. Hey, this is Adam Hewison. Thanks for stopping by. We'll see you tomorrow, same time, same place. So please tune in tomorrow at 1 o'clock